With respect to equipment, guys, the financial year is also very important. You realize that in this case, guys, we didn't sell, we actually bought. So basically, we will start counting from here up to the end. Okay, so for how long have we had this equipment? We've had this equipment for 6 months. You realize that we have 6 months, which is 1, 2, 3, 4, 5, 6. So we've had it for 6 months. Okay. Now, guys, balance of accumulated depreciate. Well, balance of your equipment at the beginning of the year was 960,000. Cost price of the equipment was 540,000. That is the cost price of the equipment purchased, and this is the balance of all equipment at the end of the financial year, which is the cost price of all equipment at the end of the financial year. Now, guys, I actually included something in there in that question just to check who actually replays these videos 3 times and listens carefully to what I say. Guys, all the answers are in the videos. Trust me. If you can play these videos and write what you don't understand down, go through it. Guys, just like I don't know how to put it. I want you guys to go and watch a series. It's called All American. There's someone called Spencer James there. He's a football player. You must see how good he is. And for him to be that good, what he has to go through. Guys, you cannot master accounting if you don't go through the pain of practicing and trying to understand what is going on. Trust me, you don't even need a tutor. You just have to go through these videos and make sure you understand them. I don't want to, because I'm a tutor as well and I get money from other people. You can have a tutor, but I'm just saying that you can survive without one if you go through these videos and you listen to everything that I say. Okay. And guys, there's no difference on how I do this here. Whether I will do it on Zoom, I will still be doing the same thing. It's just that I'll have your faces on my screen. Yeah. Just that now I don't have your faces on my screen, but it will not be different. I know some of you are like, Zoom. This is Zoom. Okay. It's just that you don't see my face, you're hearing my voice, and I'm explaining everything to you. Okay. Now, the cost price at the beginning of the year will be 960. Accumulated depreciation of equipment at the beginning of the year was 900,000, meaning that the carrying value of this equipment will be 60,000. Question is, why do I need this carrying value when equipment depreciation on equipment calculated on cost price? Why? The answer is all in all the five videos I've sent you, and none of you guys got this right. No one got this right. And that makes me very angry. Okay, because you would have realized that the depreciation on those equipment, guys, is 120,000 rand, and I specified depreciation of equipment cannot exceed the carrying value of equipment at the beginning of the financial year. If it does exceed the carrying value of equipment at the beginning of the financial year, you're going to take the carrying value of the equipment at the beginning of the financial year and minus 1, and then that will be your depreciation. Guys, you're making me a bad teacher. You know that. Now the cost price of the new equipment is 540,000. It didn't have accumulated depreciation, so the carrying value is simply 540,000. Current year depreciation, guys, it's 540,000 multiplied by 6/12. I've indicated. I'm gonna highlight it again. You see, it's going around. I'm trying to emphasize it that we've used it for 6 months, and in this case, guys, your depreciation will be 33,715. However, the depreciation of the old equipment will be 59,999. Oh, Nkosi yami. What can I do? I've got videos that you just have to replay on your phone as many times as you want. Guys, this thing is very easy as long as you read, you listen to the videos, rewatch the videos, write notes. There's nothing as easy as accounting, guys. Just going through all of this in accounting, you get around 60 marks. 60 marks. It's just one basic principle. Guys, please go through the videos as many times as possible. Trust me, you will understand this. And there's nothing absolutely difficult here. Just go through this over and over again. Let me stop complaining. Let's go to tangible assets, guys. Note we're gonna have additions at cost. Guys, you won't believe this. When I prepare these notes, I'm actually sending notes to the grade 10s as I am recording this. It's because I've repeated it so many times that I can actually do this without even putting my mind into it. Whatever I'm explaining it to you right now, you might be thinking that I'm thinking hard about it. I'm not even thinking hard about it. I'm actually sending WhatsApp messages to the grade 10s. Ask the grade 10s right now what I'm doing with them. Actually chatting to them on WhatsApp whilst going through these notes. That is how many times, it's because of how many times I've went through these notes with you, to the extent that it's now in my head, it comes automatically. Carrying value, guys, of the asset disposed, it'll be 3,434,345. I don't think that is correct. I'm going to do it quickly. It is 4,800,000 minus the accumulated depreciation. Minus accumulated depreciation at the beginning of the year, which is 2,365,625, and then minus the depreciation of the current year, which is 415,625. It gives me the carrying value of 2,018,750. Okay, so basically there's a mistake in my solution. There's a mistake with that. Disposal at carrying value must be 2,018,750. Alright, I've just corrected it, guys. That's what you're gonna have. You're gonna have 2,434,475. For you to get that, you're gonna take 4,800,000 minus 2,375,000 625. Okay, and it'll give you 2,434,475. Sorry for that. So you're gonna add that with 584,375, and it will give you this value here, which is 3,018,750, which is the one that you guys saw earlier on under disposal set carrying value. Now you're gonna take 3,525 minus 3 million. So basically, guys, you're gonna take that minus this, it'll give you that. And then you take this minus that, it'll give you 1,093,750. This 1,093,750, you can use the previous formula that I told you about, guys, where you take carrying value at the beginning of the year plus the depreciation of the current year minus accumulated depreciation of the asset sold. So basically, it's like your accumulated depreciation account. Okay, now here, guys, for your equipment, the carrying value at the beginning of the year was 60. You bought an asset for 540. Depreciation, as I've calculated, is 93,749. How did I get that? I took it from here. It is 59,999 plus 33,750. Okay, that will give me 93,749. 540 minus 93,749, it will give me that, okay, which is 540,000 minus 93,749, it'll give me 446,251. Now take 60,000 and add it with that, it's going to give you 506,251. Okay, cost price, it's 1,500,000 rand. I did show you how we got that. It is the cost price at the beginning of the year plus 540, it'll give you 1,500,000 rand. Accumulated depreciation at the end of the year will be 900,000 plus 93,749, it'll give me 900,000 93,749. So 1,500,000 minus 900,000 993,749, it'll give me 506,251. Okay, Now, in this case, guys, this is what I said earlier on. You're going to take, for you to calculate this carrying value, you're going to take this amount and add it with this amount, and then subtract the carrying value of the asset sold. I mean, the accumulated depreciation of the asset sold. The accumulated depreciation of the asset sold, if I am not mistaken, because I'm saying this straight from my head, it was 2,365,625. That's the one that you're going to subtract, and then it'll give you this carrying value at the end of the year, which is 1,093,750.